Hello, welcome to our special report presentation for Friday, March the 15th. I'm Rafi Bajan, currency analyst at xm.com, and we're going to be looking at the outlook for the US dollar ahead of the March FOMC meeting. So following the Fed's dovish pivot in January, there is a lot of anticipation for the next FOMC meeting on March the 19th and the 20th. This is going to be important because it's going to be the first time since the dovish shift that policymakers will publish their updated economic projections, as well as, of course, the famous dot plot chart. But as the Fed becomes increasingly at ease with its newly adopted wait-and-see approach, the dovish policy does not appear to be transmitting into the currency markets. So this is something that has been puzzling analysts, because the dollar, despite that dramatic dovish pivot, is in fact still trading close to 1.5-year highs. In fact, it was only recently that it made that fresh 1.5-year peak. So if next week at the meeting the Fed signals one rate hike in 2019, although this would still be a downgrade from the 2 rate hikes predicted in December, it would be positive for the US dollar, as markets are currently pricing in a small chance of a rate cut later this year. However, if the Fed aligns itself with the market view and signals it will be on hold for the rest of the year, the dollar could slip, as it would fuel worries that the US economy is possibly slowing faster than anticipated. But looking at the more medium-term picture, whether the dollar depreciates will depend on the extent to which other countries' economies bounce back, and whether the main risks currently facing the global economy, such as the US-China trade war and Brexit, are lifted. Despite losing some steam, the US economic fundamentals do still remain solid and look much better than other countries' fundamentals. So without a turnaround in growth elsewhere, so even if we do see a weaker US growth, this alone won't be enough to push the greenback lower. And looking quickly at the fundamentals, we can see that dollar index touching that peak towards the end of 2018. But overall, though, we can see it has actually been trading sideways since late summer. So if we do see the dollar index breaking either above or below this range, and which coincide with the 61.8% Fibonacci on the upside and 38.2% Fibonacci on the downside, I would likely signal a shift in the dollar's direction. So that's it for me. Thank you much for watching, and have a great day.